Check, 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 check. Check 1 2 1 2 3. Check, check, check 1 2. Check 1 2 1 2 3. Check, check, check 1 2. Check 1 2 1 2 3. Check, check, check 1 2. Okay, that sounds good. Okay, Asia session is starting. Let me move this thing out of the way. And let's hop into full screen. And I'm gonna go share the stream link. Alright, what's up, guys? Sorry, I forgot to mute my mic while I was chewing. That's probably very disgusting for you guys. No, I'm in PST, which is Pacific Standard Time, I think. It's at 5 o'clock for me right now. That's when Asia session starts. Alright, what's up, guys? Sorry, And basically what I'll be looking for here in Asia session is an expansion, right? So as I mentioned, the weekly expansion is only beginning. I think that's what I was talking about. When we moved up yesterday in VIP, in like the VIP signals chat, I shared that the weekly range has only began to expand. So what we're going to be looking for in Asia session is the rest of the expansion of this weekly candle. And that might potentially be just this midpoint right here, or it might even be the highs right here, right? Filling this weekly FVG, potentially even closing above it this week or next week. So I'm still bullish. We do have some bearish news coming, I think next week. Next week, it's already the 15th, so next 25th, no. It's going to be in 2 weeks. But until then, I think we could still run up there, clap some liquidity, make everyone think that we're going to be running high, maybe getting to 3K for the first time. Like, that's what everyone's going to start thinking once we're running on buy side. And then we're going to sell off because of the bearish news, which would be Trump's inauguration. But until then, we're chilling, right, guys? We're chilling for buys. I still think that gold's going to continue going up. It's been going up the last 2 weeks. From this monthly fair value gap. Look at that. Monthly fair value gap, we got a nice expansion. So I'm just expecting that to continue, at least to sweep the highs right here. So inside of this Asia session, I'm already coming in with a bullish narrative. You don't predict the market, you adapt to it. Like, I'm wrong some of the times. I'm not predicting it. I'm coming in with a narrative based off of price action. And then I adapt. If Asia session starts running up, creates a fair value gap, then respects this fair value gap a few times, then I'll be confident that it's likely going to at least run to this midpoint and then, like I mentioned, the highs above. So I'm not predicting it, I'm adapting to it. It has to show me that it actually wants to do what my pre-existing bias is showing. Yeah. You can see right here on the 5 minute, I was just scaling down to see if we had any new fair value gaps yet. This is the only one I found so far. On the 5 minute, it kind of consolidated around, let's not change the, on the 5 minute, it consolidated around this fair value gap. Then Asia session opened up right here, 8 p.m. EST, and then we got that big movement towards buy side. So we have some new fair value gaps. As you know, my model requires a little bit more confirmation. We're not just gonna hop in there and start trading just because we got a little bit of expansion. Though, can't say that I'm not in any trades right now. I don't know if this is your first time seeing Asia session, but we typically get this expansion every single time during Asia session within the first hour or two. And most of the time, it's in the opposite direction. However, today, I don't think that this expansion is in the opposite direction of our bias. I think that we're going to continue running higher. This is not financial advice, but I will be giving you guys some financial advice. Unofficially. So obviously, if we were to wait for a 30-minute, then this stream would obviously be a little too longer than I would want it to be. I don't want to just sit in front of the charts. That's not what I normally do. I like to actually go around, do whatever I want to do with my life, and then check on the charts occasionally. Once I see that volatility, I see that 30-minute higher time frame for value gap, I get in. So what we're gonna do here is we're going to trade off of a higher time frame or a lower time frame than I normally would, which would be this 5 minute fair value gap right here. I don't know why it keeps doing that. 5 minute. And what I'm going to expect is once it pulls back into this 5 minute fair value gap, I'm going to see on the 1 minute time frame that there's going to be a bunch of fair value gaps inside of the bearish leg that ends up running into this one. So once we run into this fair value gap, I'm going to wait for one of these 1 minute fair value gaps to be disrespected once we start moving up, and then I'll take the trade for a long, and I'll just target the nearest high. I think we have a high somewhere to the left right here, unless I'm tripping. If we don't, yeah, we don't actually. So we're just going to target the midpoint instead. So in order for us to get something on the 15-minute time frame, like a fair value gap or something, we would have to wait for two more or one more candle closes. So this one to close in 20 seconds, and then another 15-minute candle to close, without ever coming down here and filling the fair value gap that might form. So as long as this next candle opens up and does whatever it wants without coming all the way down here, then we'll get a 15-minute confluence that we can use. Otherwise, we won't have one. So there you go. This one closed. And now if this one closes at least right here or anywhere above the high of this candle, we will get a fair value gap on the 15-minute time frame. But that's why I'm using the 5-minute, because we don't have anything on the 15-minute or 30-minute yet. We just have 5-minute fair value gaps right here. 5-minute and one lower. But the lower one has already been tapped into. I wouldn't trade. I wouldn't wait for it to tap into this one to take a trade. I would take it from here and just factor in. So once I get in, my stop loss would just be factoring in for that one, right? It could still potentially go in. let me change this color so we can see what that would be. Like almost 2 RR trade. I never really cared about the RR. All that matters is that your trade hits TP. Okay. We actually have a new fair value gap right here. It's a really small one, but it exists. One of the things that I see happen a lot is when there's a fair value gap like this, which is what might happen with this one, right? So when there's a fair value gap that's up here and there's one below it, what it does is it wicks into the one below it, but it ends up pulling back and closing right here before going higher. Let me know if you guys got any questions in the chat. We're just waiting. We don't have enough confirmation to take a trade yet. You can see that we tapped into this fair value gap and got a nice pullback. This doesn't make me have fear of missing out and right away try to get in up here, because then you'll end up sitting through the chart as it pulls down lower and lower, right? When you panic right there because it pulled back right away, you're like, oh shoot, I gotta buy before it leaves without me. That's when you take a position from right here and it ends up going down here, taking your position out and then going higher. That happened to me yesterday, but it was because of equity. I was trading my 200K, and I took a trade off of this 30-minute fair value gap, thinking that I had, like, I was risking like 5K on that trade, because I had multiple positions. So 30-minute, right here. So this is the 30-minute fair value gap, right? I'm on the 30-minute time frame. And I was taking a trade on my 200K to long it to this weekly fair value gap that we're in right now. And it hit, right? And if I had properly managed my risk, I would have funded that second phase. But what happened here is when I was holding a trade over the close. So when it opened, it registered that my starting equity was like 197,000 when it was really like 193. So I had less like drawdown. Daily drawdown started from the equity. So when I took my positions, I got super lucky. I was like $30 off of blowing the account from daily drawdown just because of the equity of the trade that I held. It like acted as if I took losses. So I was barely like fortunate enough to close my position in time before it pulled down a little bit lower. So I don't really care that I didn't catch this trade. I'm glad that I ended up surviving on that account. But yeah, the bias, which is what I shared in VIP yesterday, was no, my Discord DMs aren't turned off. If you can't DM me, that's your settings in Discord. Your settings, like, oh, don't allow DMs from strangers. It works both ways. If you aren't receiving DMs, then you can't DM other people. Anyways, so I ended up closing the position, and I was just like, oh, I'm glad I survived. Literally $30 off of maximum daily drawdown. So the account would have been breached. I took the trade on some other accounts. I ended up getting a nice little funded trade on this. So I'm up like 2K on my funded, which is about like 1,000 payout. Yeah, it was quite nice. Even this right here, so it looks like it respected this 30-minute fair value gap, but there exists a daily IFEG right here. So some people might have been thrown off because it didn't create an IFEG and it didn't close above it right here. But I knew that because we had a daily fair value gap, it doesn't matter that we didn't close above this one. We're probably still going to run up higher. Okay. Let me show you the daily IFG, by the way. So it's this one, which is part of the reason why I was questioning a little bit of what we were doing this week, because we literally ran above it, came back down, and disrespected it, right? But then we ended up running above it again, closing, tapping into it right here, and that's where we were getting into bullish positions from yesterday into this weekly fair value gap. So let's go down to the 5-minute time frame again. So look, respected it once. This candle also seems to be respecting it, but I'm gonna wait for the close because it could still run back down, and it's not enough confirmation for me, right? Because if this candle closes, we should have a fair value gap on the 15-minute time frame. So even though it looks like on the 5-minute that it's already running away from a fair value gap, look, it looks like it's running away. Little do you know that even if this candle closes up here somewhere, what do you think it's going to do? It's going to pull back down, take you out, and then go back to the actual profit target. Because you're going to go break even, it's going to take you out, and you're not going to get the trade. You have to always be aware, like, even though it looks like it's running away, this is just creating a 15-minute fair value gap. So once this closes, 15-minute fair value gap right here, and then it's going to use it to actually go to the profit target right here. Midpoint of the weekly fair value gap. Just write a message in the general chat. In the general chat, write a message and I'll send you a DM. Or I'll just add you as a friend request. Someone said, is it true that you can stack funded accounts so you can just make it into one whole account? So if you have two 100Ks from a prop firm, like funding pips, you can combine the 200Ks if both of the balances are at like flat 100K. And you will get a 200K with the same drawdown that you had. So if you had 5% daily drawdown, then on a 200K, 5% daily drawdown is 10K, and 10% would be 20K max drawdown, right? But here's why it's not a good idea, because what's really the difference right here, right? It's not different from your 100K or 200Ks. And I'd actually prefer to trade them separately, and this is what I'm recommending that you guys do as well, because you have the opportunity. Like, what if one of these days you just lose, like, I don't know, you're trading during a terrible time where you're psychologically not there, not present, and you just end up revenge trading or something. Having two accounts will at least prevent you from losing both or getting both into drawdown. If you only have one funded account, you can end up making the mistake on one account and losing everything that you have. But in this case, you only lost one account and you still have another to trade. Plus, it's not very different, right? Trade them separately. You can take the same trades on both accounts. So we have 5 minutes left right here, 4:20, for this 15-minute fair value gap to form, I think. Let's make sure. Yeah, so 5 minutes left, or 4 minutes now, for this next 15-minute fair value gap to form, and then I'll be more confident at taking a trade. Why will I be more confident? That's a good question. So right now, all that we have is 5-minute confluences. Remember, the higher the time frame, significance. I spelled that wrong. Significance. So the higher time frame, the higher the significance, right? It's obviously drawing right now towards a weekly level. Right now, this midpoint right here is a weekly level. It's drawing towards the weekly fair value gap. So that's going to rule over any bearish fair value gap that's on the daily time frame. By the way, there's one on the daily time frame, which I just remembered about. This can be a more specific target right here. Perfect. You just gave us a little bit of a higher RR on the trade that we're going to take. So right here, it's probably going to draw into this one. So let's go back into the 5-minute time frame. So obviously, it's not going to respect any daily bearish fair value gaps or daily bearish order blocks right now if there's a weekly target that's higher than those order blocks, right? So it's not going to care about that stuff. Same with the lower time frame. It's not going to care about the 5-minute bearish confluences, bearish order blocks, bearish breaker blocks if there's a 15-minute bullish fair value gap, right? And then as well, just having more confluences, like you need at least 2 or 3 to be confident in your position. At least to have some defense, right? Like you're attacking at a war and you want to make sure your base is defended. This is the same idea. Like if the enemy troops, which is these black candles that we don't want to see, start attacking our base, we're defended. Right? We're defended if there's a 15-minute fair value gap that exists here. Right now we only have 5. But if we have a 15, our base is defended. We can attack without worrying about our stop loss getting hit. And then it's also better not to get in right here or right here when the better entry will be right here inside of the 15-minute fair value gap. So you'll see it's going to start to pull back right now once this candle closes. You understand that? I actually had it marked out wrong because I guess I didn't see this wick. So I had it marked from the top of it, but it's actually right here. It doesn't really matter. So now we could go back to the 5-minute time frame. And now that we know that this fair value gap exists, it's also right below this low. What we're going to look for now is 5-minute, 3-minute, 1 minute. Once it runs down into it and then runs back up, we'll trade from that 1 minute, 5-minute, or 3-minute IFEG. And we'll have a good trade. Because even then, we still have like a few pips to get to our target. This like 50 pips basically. And if we target here, that's almost 100 pips from 2,700. Worst case, like that's when we get our position in after the confirmation. Okay, so it swept this high. It might either run up from here, no confirmation, or it can fill the buyers right here, taking out those buyers, coming back down to the open of this daily candle right here, right? New day opening gap exists. Even though it doesn't look like it, it has some significance. Sometimes it's a literal gap that you can see, like from here to here. And it's a literal gap in the market. So we didn't get that today, but it aligns pretty nicely. So what we're going to do is we're going to try to take a nice trade off of this new day opening gap, which is going to be slightly below this 15-minute fair value gap. It's going to be inside of this 5-minute fair value gap. And then we're just going to target the right here. And this is going to be our Asia session, maybe into London, depending on how long it takes to get to our target. And if it runs without us, no worries. But one of the things that I do, if I ever get impatient or greedy, and I know I'm so confident that it's going to get here, and I just don't want to miss out, nor do I want to take a bad position and lose money. Because if I take a high risk position right here and it ends up going there and there, I'll lose money, and this position from here to here isn't really going to make me the profit that I wanted. It might make back my loss, but what's the point of taking that loss, right? So what I do instead when I get greedy is, because it's normal to have that feeling of missing out. What I do is I lower my risk to like the lowest possible setting, and I get into a position. Sometimes not the lowest possible setting, like on a funded, I might do like 0.5 instead of my one lot, which is half the risk. And I'll have a bigger stop loss, which will still factor in, like if I was to take this trade from here, my stop loss will probably go down here and I'll get a 1-to-1 trade. Right? So if I take it from here, all I have to do is cut the risk in half, target this same exact level or a little bit higher, right? The daily bearish fair value gap up here, and my stop loss still goes down here. But because I have half the position size, I won't lose as much money. Is it invalid? I'll fix the link right now. I think I could even do it right now during the stream. Let's go find it first. You just have to shoot me a friend request. Yeah, I'm not sure. I'm not sure why this is happening. It's not the case for anybody else. Like, I always get DMs from random people from different servers. Add me as a... or it says we're friends now. There you go. You can DM me now. I'll add the link right now. Could you guys check if the link inside of the Telegram works? Like this one? Because I think I'm just going to add this one. I think I just recently added this one again. Yeah, like in December. Okay. Now how do I add this to the stream? Maybe I have to do it in YouTube. Here's the indicator. It literally just says that oh, that's why it's not higher timer, it's HTF. I abbreviated the wrong things. HTF power of 3. You'll find it if you search that up. What was I gonna look at right now? Oh. Sorry, it's not high. Okay, you guys should be able to join the Discord now. Updated that link. Okay, I should actually do that from the root. Okay. Everything should be good now. Okay, we're finally pulling back into this. And inside of this leg, if it's a nice sharp pullback into the 15-minute, we might get some nice fair value gaps on the lower time frame, bearish fair value gaps, that we will use as IFEGs. We might even get one on the 5-minute time frame, which would be just beautiful. So I'm just going to wait for that to happen, finish my food right now. What chart are you looking at? Forex.com is the official chart. That's the chart that ICT says to use. Look, it has yet to hit the midpoint. Midpoint is around 2705. We don't look at NQ during Asia session. Gil. We may run Gil. Because it's a USD based pair, so you don't want to be trading it during a JPY or yen session. Because there's not going to be much volatility. And I guess I could pull it up and show you guys. It's actually not looking bad. Look, Asia session created a little bearish move, and this is on the 5-minute time frame. We got a IFEG, and it pulled back even below it, but it came back and closed above it. So I think that it's going to get some expansion, at least into here, which is the nearest fair value gap. But I wouldn't trade it because what it does, like if you look back at any data previously, during previous Asia sessions, look at what happens. Practical guide on using TradingView? Sure. Look at Asia session. Nothing happens. So if you trade during this time, all you're going to do is literally lose money. You're going to get into buy, you're going to then switch it out for sells, and you're just going to lose money. This Asia session kind of consolidated, but it moved at least. But if you keep looking back, like look right here, Asia session. What did it do? Nothing. Asia session. What did it do? Nothing. Chris, who trades NQ during Silver Bullet every day, the other mentor that teaches here. Look as well, yesterday's Asia session. Nothing. He uses this Asia session liquidity if it's nice and sharp during his New York session. I'm not targeting the midpoint because of it has yet to be filled. I'm simply targeting it as the nearest target. So if we think about what is the next target that's like nearby, it's this thing. Then there's the daily because we're bullish. Like it's just going to be moving up no matter what. But we're just adding targets to get out of our position. Right? So it's not necessarily because it hasn't been filled yet. It's just because it's the nearest thing that's here on the highest time frame possible. I can do a practical guide for you right now. Okay, so you pull up TradingView, you pull up the chart that you're going to be looking at. So if you're trading gold, I have the futures for the gold chart, and I have a different chart just to keep it clean. Sometimes I just use it for videos. Then I have my main one, which is on forex.com. This is the one where I actually look at price action and everything. I have some cryptos that I'm holding, and the dollar, which I rarely check nowadays. I used to use the dollar, but I realized that I didn't need to. Higher time frame narrative on gold is all you need, with some economic news as well. That's all you need. But you use those charts, right? You add them to your watch list. Then you go inside of your gold, and you annotate fair value gaps, right? You have to learn about fair value gaps from ICT or from anybody else that teaches them. It's the way that the market runs. It runs from fair value gap to fair value gap. And then you add indicators that go along with your style of trading. So I like indicators like sessions. No matter what you trade, session indicators are really helpful. They're the only universal indicator that I believe everybody needs to show you when the sessions are at, because this is the only time that you should be trading. Choose a session that aligns with your time zone and trade that session every day. Every high probability day. How do you know what days are high probability? Right here, Sunday, Monday. Don't trade those days. Right? Sometimes for my time zone, market opens up in Sunday like 5 p.m., which is Asia session. So I try not to trade that one unless like there's no news the rest of the week. So I swing trade from Sunday. But don't do that. Those are low probability days. You want to trade the days with the red folder news. That's what this stream is titled. Trading XAUUSD after CPI. So that's what we're doing here. I actually have a video on helpful indicators. I made it recently. It's in the Discord in videos, indicators, and helpful ICT indicators and kill zones. Basically explaining when the kill zones are at and how you should use them. So go watch that if you want to. Let's go back to the lower time frame. Okay, we're almost there. You can see that it tried to fake out some people right here. The nice bullish candle, and then it ran back down. Just a little bit lower, it's definitely going to tap into this. And I'm just going to try to get in somewhere around here. I'm going to filter in or factor in my stop loss for this, like I said. Targets are pretty high, like pretty far away. The first target right here, 2705. Let's label it. So then I could like talk about it. TP1 hit, TP2 hit. So TP1, TP2, 2710. And TP1 at 2705. Or this is 2706. Boom. So the first target's almost 50 pips away if we get it right here. Or if we get in right here, this is 30 plus 50, so like 80 pips. Yeah, it's on YouTube. It's free. You just can find it in my Discord, which is in the link in the caption right now. So once it dips below this midpoint and we get in our position somewhere around here, then we will have a really nice trade. Like from here, we just have to factor in because it can still run down. It can try to go into this. Again, it can try to sweep even the lows. And if I was to take another loss, I wouldn't be concerned because I still think that it's going to be drawing higher. Right? So the way that it works is you want to be able to take losses if you're swing trading and like not take too much losses, right? If you're taking a loss here, take a loss here, keep entering buys, you'll just keep taking losses before you realize that it's actually been bearish. So have some rules that make you stop trading at some point. And then you just kind of factor in for the bullish. Since we're bullish, we're probably not going to be dipping down too far, right? It's been failing to sweep the lows. Finally swept the low right here. So I think we're going to continue running just from this 15-minute fair value gap. But I'm going to factor in for this. And my target's going to be up here. And now I'm going to close some partials right here. And that's basically kind of like how I trade. My psychology around taking the trade and having specific targets to aim for. Alright, so it's about to sweep the low right here and enter into our 15-minute fair value gap. Like I said, it might dip a little bit lower just to get into the daily fair value gap. Like, not daily fair value gap, daily opening gap right here. So from the open. Sometimes it likes to do that just to, like, clear the orders right here. So don't panic if it starts running up. I think it's going to dip a little bit through this. And we can even wait for one more 15-minute candle to close before running higher. Right? Just as confirmation. Because what if it closes below it, right? That would obviously tell us that it might want to dip lower. But all that matters is that once we tap into it, we get in at around the open. It's a high probability position. We know that this bearish move right now is just a fake out because we missed our target, which is right here, this midpoint, and this daily fair value gap. We missed our target. So when it starts running down and it missed its target, it's going to go back and actually hit the target. So that's what makes me and gives me a lot of confidence to place a position. I'm going to get in right now. I turned off my camera just because my roommate came in. But I'm going to get in right now. Like I said, I'm factoring in for the low and I'm aiming for the high. Boom. stop loss, like I showed you guys 10 times. So if you want to know what the stop loss is, just replay the video a little bit. Get in on my funded. My funded's up a little bit, and I don't really like trading my funded because sometimes I get like psychological when I lose even a little bit of money when I had a payout, and I'm like, oh, I gotta trade this to make it back real quick. Also, I'll break down why I'm not looking for any 30-minute confluences a little bit lower. So there you go. We're about to hit the new day opening gap right below. And that would be like the most optimal area to get in, right? Because this is, again, this brings you back to before it expanded. And we know since the target's up here that we're probably going to expand bullish. So if you get in right here, it's like getting in a high probability position. Anyways, on the 30-minute, there are two fair value gaps that exist, a IFVG and an IFVG and a bullish fair value gap, which are right here. See this? Boom. So these are two fair value gaps that exist, but the market might not want to dig into them just yet because it's building up liquidity for news tomorrow, right? We have some Thursday unemployment claims, which is another decent news. Might not actually do anything. And also because this is a balanced price range. So there's a little bit of like over section right here from this IFVG and bearish FVG or bullish FVG. So it's kind of like it already did its purpose where it trapped the orders right here of the sellers. So think about it like this. In a bearish rally gap, there are only sellers right here. So if it closes above, all these sellers that have yet to get out of their position will get trapped. And then the market just runs up and then they lose all their money. Right? That's kind of the idea of it. So let's go back and see. Maybe it might actually run down there. We have 7 minutes until this closes. And we did tap into the new day opening gap. Or at least the level. It's not a gap. It's just the level at where the candle of this day opened. See, it dipped slightly below the open. This is a nice confluence to have. That's why it's really nice to have this candle because it literally shows you what the daily candle does. And during Asia session, as you know, we get this kind of expansion. We get a manipulation wick and then we get the expansion. So it's good to know that even though it looks like it already ran, the expansion has yet to happen. Right? Because if it was bearish, for example, then this bullish move right here would have been the wick and then we would actually expand with a bearish candle like this. And who knows, it could be like that right now. And in that case, I would just have to take the loss and reconsider getting in from down here because the targets up here still exist, right? And that's where I'm wrong sometimes because it's not that my confluences are wrong. It's that my narrative is just mistimed, right? If I'm aiming for buys right now when it wants to come down here first, then I would take a loss. And that's why it's important to survive. Right? It's important to make sure that you don't lose all your money on one trade and not be able to trade the next one. Let's turn this camera back on. I gotta get rid of my drawings. Okay, I just finished my food. I was also on the phone with one of my friends. He asked me to go to the gym, and I am down. I already worked out today, but I want to go hit the steam room. Basically, what's happening right now, let me give you a quick breakdown before I go. Okay, so what just happened, we wicked down almost into this 5-minute one. I think it missed it by a little bit, but it pulled back, and it's looking like it wants to close above inside of this thing. So we have 2 more minutes, right? And if it closes inside of this thing, we're still kind of chilling, and it's probably going to run up. If it closes below, like I said, I might be a little bit scared, but as long as I survive, and that's all that matters. As long as I survive, take the next position, and my next position will hit the target, make up for the first loss and some profit. So that's what I'm looking for. Take care, guys.